The euro gave a muted response to the ECB decision to leave the key interest rate unchanged. The US dollar index has not been able to regain earlier losses. Wall Street is now trading in the red despite better than expected corporate earnings reports on the US high-tech giants. A weekly update on the initial jobless claims still keeps investors on edge. Lately, the US stock market received a boost from the prospects of inventing an efficient treatment for the coronavirus. Another reason behind the rally was the Fed's pledges to increase fiscal stimulus. The Dow Jones spiked over 600 points. At the same time, the US dollar lost ground as traders are shifting focus towards riskier assets. Today, the whole picture is different, so the US equity market opened with losses. Futures on the Dow Jones declined to 1%. Pessimism was caused by a series of macroeconomic data, including statistics on first-time unemployment claims. On the whole, US stocks are extending a winning streak. Benchmark stock indexes have already won back nearly 60% of losses. Now they are at the crossroads. The stocks will either make a correctional decline or continue rally. If they follow the uptrend, traders will see virtually a V-like recovery. There are no reasons for a sharp decline, as the US Central Bank has pumped up too much liquidity into the financial system. Yesterday, the US currency slipped in the light of a report on the US GDP data and the press conference of Fed's leader Jerome Powell. Today, traders seem to take a little notice of the US regulators' readiness for further stimulus measures. So the US dollar is drifting higher. Its index opened the New York trade at about 99.50. Today, the ECB followed suit of the US Fed and also put the key policy rate on hold, even though the Eurozone is facing a tougher economic crisis. Flash estimates from Eurostat showed that the economy shrank 3.8% in the first quarter. The ECB decided at the policy meeting today to expand stimulus if economic conditions worsen in the Eurobloc. The policy update was milder than expected. Originally, the euro showed a muted response to the ECB policy decisions. The euro-dollar pair edged down and went on trading at about 1.08. Later, the currency pair moved upwards, heading for a 1.09 and higher. Last week, 3,830,000 Americans filed for unemployment benefits. Experts pulled by Bloomberg assumed 3.5 million new first-time jobless claims, which is a lower number than 4,442,000 on the previous week. To sum up, the total number of layoffs exceeded 30 million over the recent 6 weeks. The Canadian dollar failed to break 1.39. The USD CAD pair reversed upwards after a steep nosedive. Today, the US dollar is holding the upper hand over its Canadian rival. The currency pair settled up at 1.3907. Today, the statistics revealed that Canada's GDP remained flat in February following moderate growth in the previous 3 months. The most meaningful figure, GDP for March, will be published in late May. Meanwhile, WTI futures spiked over 17% in the evening trade. The North American benchmark rate was trading at $17.60 a barrel. Brent crude jumped 10% to trade at $26.70 a barrel. However, a further rally of Brent prices remains an open question. Today, Brent crude actually exhausted its climb to $27 a barrel. The next move could be a correctional decline to 24. If the price rebounds to $27 again, the next target is likely to be $32. That's all for today. We keep monitoring the financial market situation. Subscribe to our channel and keep abreast of the latest events. See you tomorrow.